gold and silver. During these price drops, it is so important to remember why you buy precious metals. Hey everyone, thanks for watching Yankee Stacking. Do you know, successful investing is tough. Not so much because of, some lack of skill or knowledge or even luck. Because of discipline. Buying when others are panicking and selling when others are euphoric and maybe holding when you're bored, they're all keys to growing your wealth. I like to think of investing as 5% intellect and 95% patience. To the precious metal stackers out there, these spot price drops can make you wonder why you started stacking in the first place. And what do you do now? Well, the easy answer is buy the dip. You hear that a lot, right? And while there's much wisdom in that, timing and buying your silver and gold in tranches is also wise. My LCS dealer just warned us in a prior video to let the precious metals market get flushed out a bit before stacking hard again, especially with gold. But that takes patience. There is also another area that I think warrants taking advantage of this drop in silver and gold spot prices, and it avoids those nasty premiums too. And this is also an area I get emails that say, Yankee, I'm looking to diversify my 401k or IRA, and I want to get some mining stocks that make sense. What miners do you like, Yankee? Give us your picks, Yankee. Precious metal mining stocks are another way to buy the dip with gold and silver markets. Now stop right now, okay? I'm not a professional financial advisor, and I am not suggesting you adopt my investment strategy for yourself. You figure that out yourself, okay? Make your own decisions on how to invest your money wisely. Remember, I'm a precious metal stacker on YouTube. I love to buy physical silver and gold, especially gold right about now, to protect me from failing currencies, failing central banks, failing governments. And by the way, folks, those three things are happening right now. And that's why I buy this stuff. It's wealth insurance, okay? It's not a way to make money fast. One place that I actually do try to make money is by speculating a very small portion of my wealth in mining stocks. Did you hear the words speculating and very small? Because that's really important, okay? Junior mining companies and even royalty and streaming companies like the one we're going to talk about in a minute are high risk and high reward. Right now, the risk side of the equation has been in play for the past few months now. My model portfolio of junior mining companies are down. One has been down quite a bit. Gold Royalty Corp. I bought some shares back in September 21. Could have traded it just a few months later for a nice tidy profit, but I didn't. And I took a hit. But you know what? The stock market has taken a hit too, if you haven't noticed. Frankly, I think it would be a foolish idea to buy the dip with the S&P 500 or the NASDAQ, but I may be doing just that with Gold Royalty Corp. Not sure of the timing yet, but I'm probably going to buy more shares this summer. Just like physical gold and silver, I need to remember why I bought Gold Royalty in the first place. It's a speculative play to build some of my wealth during what I still think is a bull market in gold. This is a buying opportunity for me. So let's get into it with the CEO of Gold Royalty, David Garofalo. I'm going to start out with the hardest question first. Let's see what he has to say. Hi, David. Good to see you again on Yankee Stacking.
Thank you for having me on again.
All right, Dave. I'm going to start with the elephant in the room.
Sure.
All right. While Gold Royalty has a fantastic story to tell, and we're going to go into it a little bit later, your stock price has been down 50% since September of 2021. And I know this because when I first heard your story, I bought shares back in September. I haven't sold a single one. And I'm even contemplating buying more to dollar cost average. But in just one or two sentences, David, why the huge drop this year?
Yeah, it's an excellent question, and obviously very frustrating for all shareholders, including myself. I've got quite a bit of skin in the game. And all I would say is this is the long-awaited market correction we're expecting in general equities, but the baby's being thrown out with the bathwater. And you would have thought that the gold equities would have outperformed in this environment, and that has not been the case. Even the gold has been fairly static. It's down like 1% this year. It's retained its value in the face of a severe correction in the general equity markets. The gold equities have been thrown out with the rest of the general equities. And that's not uncommon at the outset of a bear market. Discerning investors that come back into the market with fresh capital will look for defensive names, because we're in an inflationary cycle for the long term, in my view. And it's going to be a very tough equity environment for the foreseeable future, because valuations in the general equity markets were distorted beyond recognition. This correction was long overdue. We were calling for it the last time we were on. It's happened. Yeah. And I do think that the gold equities, and gold in particular as an asset class, will start to outperform significantly relative to other asset classes, relative to other equity sectors. And I think mining equities, and in particular the royalty space, will respond in kind.
So last time we spoke in January, you touched on some really interesting points. Inflation. You said it would continue to go up. It did. And real rates would continue to drop. Do you see that as still likely? Lower real rates with the Fed raising the federal funds rate?
Yeah, so a couple of points there. I do believe inflation will continue to accelerate. I also think the headline number, as I said last time, vastly understates the reality on the ground in terms of food, fuel, and shelter. You remove those from the CPI to me is meaningless, because we spend the majority of our incomes on that. Most people do, other than maybe the 1% or 0.5% of the population that are super high net worth. The reality is many of us are experiencing double-digit inflation in our everyday life. So I think that inflation will continue to accelerate. I think the supply chain bottlenecks that we're seeing are going to be there. I also think that real interest rates will continue to go down as a result. That's simple arithmetic. Nominal rates are not going to go up as fast as inflation is going up. And I also think that given the amount of debt that's been strapped on globally, the Federal Reserve is going to have to pivot in the short to medium term on rates.
Yeah.
And there's a lot of hallmarks of the 1970s and the inflationary cycle we're experiencing now, with one notable exception. We have 325% debt to GDP globally right now, when you include government debt, corporate debt, individual debt. Back in the 1970s, it was 100%. So we have 3 times the amount of debt to GDP. So when Paul Volcker came in to run the Federal Reserve in the late 70s, he could jack up rates to his heart's content, not worry about bankrupting the vast majority of the population. Today, that's an active consideration for the central banks. They can't afford to jack up nominal rates. That means that they're going to have to turn on their heels in the short to medium term and bring rates down, both on a nominal and continually on a real basis. So this inflationary cycle is deeply entrenched and likely to persist for the foreseeable future. That's why I think gold goes to the moon in that environment.
The question that I've been posing to a lot of people is, when do you think that pivot will occur? Is it the end of this year, next year? When do you think?
I think into 2023. And I think the market starts to anticipate that even before then. Just because I think we're going to see business failures. We're going to see fiat currency failures in some of the developed countries. I think we're going to have that kind of contagion, and the central banks are going to have to respond with, again, another round of quantitative easing, lower interest rates to stem the bleeding that comes from that. If you believe in that thesis on pivoting that the Federal Reserve and the other central banks globally are going to have to undertake, as I said, I think gold, really, it's hard for me to see where the top is. $3,000 an ounce was not a number I pulled out of the air. It was the all-time high back in the last inflationary cycle in the early 1980s, inflation adjusted for $2022. To me, that's just kind of a benchmark. I do believe the quantitative easing we've experienced over the last decade, really since the credit crisis back in 2008, is without precedent.
While inflation grows, gold producers are going to have a difficult time. I think that's what's going on right now. But you said that gold royalty companies would help an investor insulate themselves from operational mining costs. Does this still hold true?
It does. I mean, the beauty of our business, we have almost 200 royalties in our portfolio. Guess what? They're all bought and paid for. I never have to put another dime into any of them. And they give me a percentage of the top line from all of the mines that we have royalties in. And so as the gold price goes up, our revenue goes up, but our costs don't. I have 7 full-time equivalent employees. I could run a business 10 times the size of what we have today with the same human footprint. I don't need to add anybody else. So our costs are small and fixed. Our revenue really has no limit as long as we believe the gold price is going to go up. We only have to look back a decade to see what happened the last time the industry went through an inflationary cycle. Coming out of the credit crisis, gold went up 140%. The producers only went up 66% because they had inflation in their supply chain because they were all building mines at the same time in the middle of the Chinese super cycle. The royalty companies went up 350% against the commodity going up 140%. So they provided that leverage to the gold price and leverage to exploration, because as the industry was spending money on exploration in the ground, the royalty companies got that benefit. And I'll give you another example. We have almost 200 royalties in our portfolio. Our operating partners are investing $200 million of exploration or 700,000 meters of drilling in their properties this year, of which we fund zero, but we get the benefit of that upside. That's the beautiful thing about what our model is. The operators take all of the risk and we get all of the upside.
That's why I bought shares in Gold Royalty Corp. Inflation insulation is what I'm calling it, David. So can you bring us up to speed where Gold Royalty is at? Maybe something to convince me to buy more shares during this price drop.
Well, from this existing portfolio, we have nothing but growth going forward. And we have such confidence in that growth. We introduced a dividend 10 months after our IPO earlier this year. And we're paying about a 1.5% yield currently. And given that our revenue is forecast to grow at a consensus estimate of 60% compounded annual growth over the next 5 years, I have a high degree of confidence that our dividend is going to grow over time, our returns of capital to shareholders. And that's exciting. It's growth, not only from a very diversified portfolio of royalties, 200 royalties almost, but also from very high quality assets in low political risk jurisdictions. We're exclusively in the Americas. 75% of the value of our business is in Nevada, Ontario, and Quebec, some of the best mining jurisdictions in the world. And they're from assets that are long life, low cost. We have a royalty on Canada's biggest gold mine, Canadian Malartic, which has 30 years of reserves ahead of it. We have a royalty on what's going to be Canada's second biggest gold mine, Côté, owned by Gold in Ontario. That has 20 plus years of reserves. We have a royalty on Goldstrike, the underground extension of that, which is the United States' biggest gold mine, operated by Barrick in Nevada. We have the royalty on the underground extension of that. So we have multi-decade, multi-generational assets that provide that foundational element, that annuity that's going to be in place for decades to come for our shareholders, which underpins that dividend growth that we hope to be able to achieve over the coming years. And through the consolidation we've undertaken over the last year, we brought in Rob McEwen, we brought in Eric Sprott, Jimmy Lee on the pulp and paper side. He was one of the original shareholders of Golden Valley and Abitibi, which we merged with last year. But also within our board of management, we have some very impressive individuals. Ian Telfer is the chair of our advisory board, and Ian founded Wheaton Precious Metals 15 years ago, which is the second biggest royalty and streaming company in the world by market cap. He spun it out of my old company, Gold Corp. We have Alan Hare on our board, 35 years as a mineral processing engineer, prolific mine builder and operator on our board. We have Warren Gilman, who runs Li Ka-shing's Natural Resource Fund out of Hong Kong. He's a foundational shareholder and also on our board as well. What that gives us is not only experience in operating and building mines and assessing the risk of things that we're investing in and taking royalties back, but it gives us access to opportunities. That's why we've gone from 14 royalties at our IPO a year and a half ago to almost 200 royalties today, because of access to opportunities that our competitors weren't even aware of.
Do you have a price target of $8.50? Did I read that right?
Yeah, there's a number of analysts out there. We're covered by 4 analysts currently, and with the promise of a couple more coming up, hopefully down the pipe. And I think the average target price is north of $7 per share, and we're currently trading at about 250.
If I could summarize this, David, Gold Royalty has awesome properties in low-risk jurisdictions, great management, some big players with skin in the game. You've already paid a dividend, and you have a price target of more than, 200% above the current price? That all sounds promising. How can potential investors get more info on Gold Royalty Corp?
Well, goldroyalty.com is our website, so very easy to remember. I think we got the Kleenex brand of royalty
Yeah,
company
that's good.
names, so that's a very good brand. And we're GROY, we're on the NYSE Americans.
Yeah, New York Stock Exchange, that's big. You can buy this stock with all kinds of brokerage apps and accounts. So I will put all that information in the description below and make sure to check it out. David, thanks so much for joining me again.
Well, thanks for having me on Yankee Stacking today.